Well, good afternoon, everyone. This is Kathy Neifeld. As all of you know, I'm one of the partners at Agency One, and we are thrilled to welcome you to our Friday afternoon Tap the Talent, featuring Neal Halder, Assistant Vice President and Chief Underwriter for the Principal Financial Group. We were thrilled that Neal agreed to be the featured guest speaker for this Tap the Talent. For those of you that have not participated in a Tap the Talent previously, these are small group webinars that Agency One hosts every few weeks with an expert in the field. When we started January, when we rolled out in 2022, we decided to focus on underwriting, and one of our first asks was to Mark Householder saying, we need Neal. We need Neal. Neal is great at this. Can you get us Neal? And Mark was gracious enough to reach out to Neal, and Neal was, said, sure, why not? We wanted to have Principal featured for a number of reasons. There's been some changes going on, in the back office with Principal that we've had a lot of questions about, and there's a lot of very exciting things happening at Principal. So Neal is the Chief Underwriter for Individual Life Insurance at Principal. He joined them in 1992, has held many different positions prior to becoming their Chief Underwriter in 2006. I would just ask that everybody go on mute while Neal is giving some introductory remarks, because we can hear everything in the background. In Neal's role as Chief Underwriter, he has the responsibility for underwriting Principal's life products in their retail and COLI market, underwriting philosophy and research and development, underwriting training and quality assurance, underwriting rule, automation and data analytics, medical department, and vendor management. Neal, what is it that you are not responsible for from an underwriting perspective? We can make that question number 7.
There you go.
Without further ado, I am going to turn this over to Neal. Ultimately, we will open up the mics. If you have a question, you can certainly type it into the chat and we will get to it. We really would like this to be a dialogue more than anything else after Neal makes his comments. And before you start, Neal, I would be remiss without thanking Mark Householder. Mark is our Senior VP for Principal, and he works in their business solutions. Mark is our go-to, and he's one of the best, and he gets things done, and he is a phenomenal advocate for you and your cases and for Agency One with Principal. So without further ado, I'm going to turn it over to Neal. Thank you.
All right, Kathy, thank you very much, and Dennis and the rest of the team at Agency One. Always a pleasure to work with you and have the opportunity today to join you. So it became clear to me that the first thing that I need to do is I need to clean up my bio, because as some of you may have heard, Principal no longer sells retail life insurance product, if you will. So note to self to clean that up. It's business solutions and non-qualified are the markets that we're in. And so that's probably a good place to start, is just to provide, again, for the benefit of the group, just a quick update on what it is that we're doing, because contrary to what you might have heard back in 2021, Principal did not exit the individual life insurance business. We are quite alive and well in the individual life insurance business, but we are focusing on the business market, and specifically on business owners and their key employees, or let's say highly compensated employees that are key to them. And so, what does that mean for us? Well, it does mean that we're moving away from kind of that, what you would think of as traditional retail life insurance business, and instead focusing again on an area that frankly we've played a lot in during my career at Principal. So as Kathy said in the intro, I've been Principal since 1992. In 1994, I actually started working in a department called Business Market Services as an underwriter, and then as a leader. And Business Market Services was really the precursor to what we call Business Market Administration today. So that's our complementary platform on the business solutions cases where we provide both pre-sale and post-sale administration capabilities, which I think has been a market differentiator for us. Again, going on nearly 30 years now. More recently, if we look at the business market, while we played in the retail market, over a half of our premium for the last 10 years has come out of what we would define as business solutions or non-qualified plans. So again, all of that is to say that this focus on the business market is not something that's new to us. It's not something that we, woke up in 2021 and said, gosh, I guess we should maybe give this thing a try because it sounds like it could be really beneficial. And so I think that's good news for all of us, and including yourselves. And I know, Mark and I have pretty regular conversations, and I know he has pretty regular conversations with the folks at Agency One, and maybe even some of you in your advisors that you might partner with, work with, whatever the case might be. I think the bottom line is, you're all probably working with business owners and highly compensated or key employees, and maybe didn't think about it within the context that we do. And so, just real quickly, let me talk about what we kind of loosely refer to as, kind of the four opportunities, if you will, within this market. So you've got the non-qualified corporate-owned life insurance business, and we've got a specific solution set and group of sales folks that go after that market. That's not the side of the business that Mark is on, but we've got other folks that can handle that. We have then our business solutions, and this is where Mark's going to focus his attention. Business solutions being things like executive bonus, key person, buy, sell, any kind of program that would allow an employer to, recruit, retain, reward, again, key employees, and even themselves as the business owner. A third arm of that is what we would call trust business. So trust-owned business. Again, think business owner, key employees. They're doing life insurance, and there's going to be some trust ownership of the coverage. And then the last bucket is what we would call our affiliate bucket. The one thing that we want to make sure that we don't do is take away that opportunity for ourselves to write the business insurance, again, on the business owner and their key employees, because we say no to maybe some what we'll call personal coverage of theirs, or some might think of it as retail coverage, if you will. And so we've got this part of the business solutions program that says that, we want to take care of the business owner and their key employees, both from a business and personal perspective. And we'll take the business in whatever order it comes, meaning that if the business owner or the key employees want to do their personal planning and make sure they have that in order before they do the business planning, we'll certainly consider that business. And so when I think about this, and when I think about, well, where are we focused then? Or importantly, maybe where aren't we focused? I would say the way that I think about it is, if you had a 30-year-old looking for 500,000 or 10 mil or $1 million rather of 10-year term insurance, and that's the only coverage that they were interested in, and there was really no other kind of known affiliation to a business or as a key employee of a business, that's probably not the business that we're looking for. But if you've got a 35, 40-year-old and they're making, 150, 200,000, maybe it's even 100,000, and they're key to the business and they want to take care of their personal needs, then we'll write that individual. At the end of the day, what's really important for all of you to know is that myself and my team of underwriters are not going through and trying to determine if an application that you submit is one that fits within that affiliate bucket in particular. And so we're not going to go out and Google Mark Householder if he comes in as an applicant to see if he's a business owner or if he might be a key employee for his employer. We're not going to put that kind of rigor around the process. And so what I would say to all of you is, if you have questions about a case, certainly reach out to Mark, reach out to one of the underwriters, reach out to the staff at Agency One, and we'll try to help guide you. More importantly, if you send a case in and it turns out that maybe it wasn't a case we didn't want, we're not going to send it back. We're not going to reject applications. Um, but we'll continue to work with everybody to make sure that we understand where the business opportunity lies. And so hopefully that gives you a quick update on where we're at. So then another thing that I want to talk about real quickly is, so how does underwriting work in this, business solutions or SMB focus for us? And the good news, I think, for us is we developed our accelerated underwriting platform back in 2013, introduced it widely in 2014. When COVID came in 2020 and we had to adapt, we made some changes to the accelerated underwriting kind of philosophy, not the program itself, but the philosophy to try to underwrite more individuals on a non-examined basis. In early 2021, we actually made formal expansion of the AU program with regard to the face amounts that we'll underwrite. And then we also have expanded the program to get down into the standard risk class, and we're trying to leverage digital health data. So think electronic health records, patient portal information, maybe medical claims, some of that type of information that's out there to really expand the AU program. And we went up to 3 million of face amount through age 40, 2.5 million of face amount up to age 60, up to 5 million if it's one of the corporate owned life insurance using our platform for that. That really, I think, positions us well to play in this SMB marketplace when you think about key person buy sell type coverages in particular. Maybe the business is 2 individuals, it's worth $5 million. They each need 2.5 million. We could still consider underwriting them on an accelerated platform. So I think that's a great solution for us. And I'd like to tell you that we thought of all of that with the expectation and knowledge that we were going to focus exclusively on the business market. We didn't. I don't have that clear of a crystal ball, but I think it's worked out well for us. And so, again, a common question I get is, where does AU fit in this SMB focus? I would tell you accelerated underwriting fits very, very well. And we're going to continue to look for opportunities to expand that non-examined experience to more individuals. And we actually did that with a program we call our Business Solutions Enhanced Underwriting Program. We introduced that on October 1 of 2021. And that's really geared towards those higher face amount cases that don't fit within the accelerated underwriting platform. But again, you've got individuals that are highly compensated. If they work for a large employer, they might have an exam that's provided to them on an annual basis, commonly referred to as the executive physical. If not, they might be doing that on their own, going out on an annual basis and having a complete evaluation done. In those situations where now you're underwriting an individual, or we're underwriting an individual for face amounts that exceed the accelerated underwriting program, if we can get access to that executive physical information, again, whether it's formal executive physical or just the fact that they've gone out and done one independently, we will try to underwrite those individuals for face amounts of up to 50 million, which is our auto limit, on a non-examined basis. And so again, not true accelerated underwriting, but it's an opportunity for us to try to underwrite more individuals on a non-examined basis by really trying to leverage the medical information that's out there on those individuals that we can get through their medical providers. And we'll try to leverage our electronic health records capabilities for cases up to 10 million. If we start to get face amounts above that 10 million threshold, because the EHR is still relatively new to us and a little bit immature, if you will, then we rely on the more traditional APS. But again, I think that once again positions us well for underwriting in that SMB marketplace, especially for those individuals that maybe have higher face amount needs, even on that, again, trust or affiliate type business where they're, doing some personal planning. We've got guaranteed issue programs. We introduced a guaranteed issue term in early 2020, not great timing in hindsight because of the pandemic, but we do have a guaranteed issue term offering that works well. Again, if an employer is looking to provide an additional benefit to their employees, that starts at a minimum of 25 lives. If you're using one of our permanent products, then we can start at a minimum of 10 lives and consider putting together guaranteed issue. So from an underwriting perspective, I feel we're very well positioned to underwrite and provide solutions in this SMB focused marketplace with all of the capabilities that we had, that we've developed, and that we'll continue to look to develop as we go forward. Since I mentioned AU, let me go back to that for just a minute. If we think about where we all started with accelerated underwriting programs, and then if we think about where we're at and what COVID forced us to do, and I'm not thinking just principal here, I'm thinking more from an industry perspective. The lingering question is, well, where are these programs going to go? And I already referenced the fact that we increased our face amounts, and we're down into the standard risk class. I think you're going to continue to see more interest in expanding, again, that non-examined opportunity for individuals within some kind of an accelerated platform. So I think you're going to see companies, and certainly Principal is among them, we're really trying to lean into getting that digital health data, getting that electronic health record, trying to figure out, because there's a lot of different sources of digital health data out there. Again, you've got the patient portal information, you've got medical claims data, you've got insurance labs or clinical labs that might be available through a product called Lab Picture, which comes from Exam One. A company called Claredo has been playing in the health information exchange space, and then you've got what's called the direct EHR, and both Human API as a vendor and MIB are trying to play in that electronic health record direct EHR space in addition to the patient portal. Part of what we're still continuing to do is to figure out where each of those kind of data capabilities fit within an accelerated underwriting experience. And as we continue to look at that and build that out and get more comfortable with it, I think we're going to continue to see an expansion of the accelerated underwriting programs. The one thing that we have to be aware of and mindful of, and some of you have probably heard this if you follow any of the industry trade, is this whole issue of discrimination. It's been referred to as proxy discrimination. Basically, it's unfair treatment of individuals based on factors that wouldn't be allowed. And probably the one data source, it really sits outside of this medical data capability that I've been talking about, but probably the one data source that sits out there that gets the most scrutiny relative to potential discriminatory behavior is credit attributes or credit scores. We don't use anything relative to credit currently in our underwriting outside of our normal financial underwriting information we gather. It's something that we continue to be interested in, but we're going to continue to watch the regulatory environment and the legislative environment and ensure that what we're doing really is sustainable for the long term. So that's a little bit about AU and kind of where I see the future of underwriting going. And even on a fully underwritten basis, we're going to continue to again, lean into and try to leverage that electronic health record data and information that's out there. The reality is, even on a non-examined basis, I think we can provide a better underwriting experience and a more timely underwriting experience to, again, you and your clients, if we can find ways to leverage that digital health data that's out there, even if it is a larger face amount case. We just have to get higher hit rates than what we're currently experiencing, and we have to get comfortable with the information that's out there and make sure that it provides of equal value to what we get from that traditional APS. And I think we're seeing good progress in that area. So I'm excited about that. COVID, let's talk about COVID real quick. And, how's it changed underwriting? And, how's it going to continue to impact or influence underwriting as we go forward? And I've already alluded to some of this, but obviously how it's changed underwriting is I think it's forced a lot of us within the industry and certainly at Principal to look at how comfortable we can become underwriting more individuals on a non-examined basis. Obviously getting examiners out to visit with clients during COVID has been a challenge. And I think it's fair to say that when all of us got into COVID, not that we expected that it would go away in just a few weeks, but I don't think any of us expected that we'd be sitting here almost 2 years later and still trying to figure out how to navigate our way through COVID. Now, the good news is I think we figured some of that out relative to, again, how do we underwrite individuals? Fewer exams, more reliance on the data that's out there, medical data in particular, and get comfortable with it. That I think the longer term challenge that we're going to have with COVID is this thing that's often referred to as long COVID. What are the long term effects or impacts to individuals that have had COVID? Are there residuals that we need to be mindful of from a mortality perspective? And unfortunately, I think it's still too early to tell relative to some of those things. And so I still think that you're going to find that we're still going to have to navigate our way through COVID and try to figure out what really are the long-term impacts, especially again, for those individuals that were more significantly impacted. Think about the ones that were hospitalized on oxygen or respirators, and had a much tougher outcome than many of us that may have been infected with COVID had the flu-like symptoms, but really nothing worse than that. And we don't really expect those individuals that had the more mild symptoms to probably have any long-term residuals. We're less certain about the individuals that, again, were more significantly impacted. So I would say relative to COVID, you're still going to see probably some level of what I would like to describe as cautious optimism by the carriers and our reinsurers relative to how we approach again, those individuals that were more significantly impacted, and just ensure that we're not missing, some of the long-term impact of those that were more significantly impacted by COVID. So that's where we're at from a COVID perspective. So Kathy, I don't know if I'm just picking off questions or if you're picking them off for me. I see that we've got maybe a couple or at least one that popped up there.
I do have a couple questions, and we can certainly turn the mics off to make this more dialogue driven. And why don't we do that? Hey, Kim, Mo, why don't you turn off your mic? Mo is a new advisor to Agency One, and we are thrilled that they have decided to join the family. And so they've got some really significant cases that are in-house, which we're thrilled about. And Mo wanted to learn more about Principal and this business offering. And the first question that he submitted was, why Principal for a business owner worth $100 million? And that's not that, you didn't see that one. And then he's got one that was followed up. So Mo, meet Neal, and Mo, ask your questions.
Neal, good afternoon. Sorry to, I'm not trying to bogart all the questions either. I guess I'll give a dealer's choice in terms of you get to choose which one you want there. Or sorry, I'll defer on you.
You can take both.
Yeah, I mean, I'll take them all, frankly. So why Principal for a large case? That's a really good question, and I'll give you my answer, and I might even see if Kathy or Dennis would want to give their take from the Agency One perspective on why Principal, because hopefully we'd be in alignment. But I'll give you what I think are the reasons. The first thing I'd say, Mo, is I believe, and some might say with overconfidence, but I believe that we know the business market better than anybody else out there. And I think you might have joined a little bit late, but that this venture into the SMB focused, business solution space is not new for us. We've been doing it for quite a long time. And I think we have a capability set, and I'm going to branch outside of underwriting for a minute. I think we've got a capability set that is unequaled in the marketplace. So on the pre-sale side, we can provide complementary business valuation and buy-sell review capabilities through our advanced solutions team. So the business valuation, and probably stealing some thunder from Mark Householder here, but he knows in his heart of hearts that I could do his job if I wanted to. We're not sure it can go the other way, and he's off camera, so I can't see if he's smiling or not. But he knows that I could do his job. But in all seriousness, if we can get 3 years of business financials, we can provide a complimentary business valuation, and we'll use one of the kind of 7 common methods that might be out there to come back with that. So we can help you as an advisor and the business owner have an understanding of whether the value of the business is what they think it is. In some situations, it's much higher than what they thought. In other situations, it's maybe not as worth as much as they thought. And we can still provide a solution, but it might be a different kind of solution. And again, that could be a simple $5 million buy sell, or it could be a $50 million case where the business owner is looking to take care of themselves from an estate planning perspective. So I think we've got some capabilities outside of the underwriting sphere that are extremely valuable. And again, we've got experience doing it. Specific to underwriting, I've got a $50 million auto, I've got a $65 million jumbo. So I think I'm pretty well positioned in that space. More importantly, I have access to reinsurance capabilities out there through some programs that Agency One specifically has access to that other agencies don't, that allow me to begin to underwrite even cases that exceed the jumbo limit without necessarily having to go out facultative to the reinsurers. I have access to Munich Super Pool, if you're familiar with that. And so we've got some underwriting capabilities from a reinsurance support perspective that I think allow us to provide solutions on those larger cases. And then I'm going to be bold and just tell you, Mo, we know how to underwrite, and we understand the business market.
Amen to that.
That's what I was going to say. Dennis has to Roger up to that one. Dennis is my proof in the pudding there. So good on you.
And so, are we going to stand out with any particular condition relative to other carriers out there? Probably not. But I think what you're going to find is our approach to underwriting is competitive. It's aggressive when it makes sense, and it's consistent. And I think those are really important in this marketplace. Now, sleep apnea, everybody has it. If they're using their CPAP like they're supposed to, they're generally getting preferred or best class preferred from us if they otherwise qualified. Everybody's got anxiety at some level or slight depression. Again, qualification for preferred or even best class preferred if they otherwise qualified. Depression, anxiety doesn't kick you out of our AU program. So you can still qualify to be underwritten on a non-examined basis, even with some minor medical impairments. I think we treat diabetics very, very fairly. I think there was a question specifically about prostate cancer. There are some prostate cancer risks that we will consider on a preferred basis. And so I think, again, what we try to do is take a well-rounded, thoughtful approach to underwriting. And yes, we have mortality and profitability objectives that we have to meet, but we understand that there are ways that we can still do that will create a win-win-win for all of us that are involved in the process.
I appreciate it, because you're right. The crux of the matter is like, what are we really protecting? So you got to value that thing, and that puts a little reality in it for the business owner. And then, like you said, all we can ever ask, I think, for anybody is to get that well-rounded approach and look at the big picture, and frankly, let you guys decide and compete for the business from that perspective. So I appreciate a good answer. We're like halfway through. I want other people to be able to get in.
All right, very good.
Thanks, Mo. We have a question from Bobby Trottenberg regarding exams and getting examined during this COVID world. Bobby.
Hi, how are you? Thank you, Kathy. And thank you. This is very educational. We've had a lot of situations lately because of COVID, and you touched on it a little bit. Clients feel reluctant to have somebody come out and examine them. They don't know who they are, but they don't have a problem if we allow them to go to their doctor and get the exam. How do you feel about that?
I'm not opposed to it, Bobby, and great to meet you, by the way. I'm not opposed to it. I will tell you, there are challenges with it. And the primary challenge we have with it is the handling of the fluids. And It's not that we can't overcome it. We can. And again, Dennis has had a lot of experience with this. But if we're going to use personal doctors or, you know, I guess if they wanted to go to a walk-in clinic and have a doctor, if they were comfortable with that, they certainly could. Even though in that situation, I'd probably try to send them to one of the like exam one testing sites to do that. But the issue with doctors' offices tend to be you would think that there would be no issues with them handling the fluids, handling the blood, but there are. And the primary reason is just because, you know, the clinical space and the insurance space is just different enough that sometimes they mess it up. And so if we can, you know, kind of coach or walk the doctor's office through what needs to be done to ensure that everything gets handled appropriately, then I don't have a problem doing that. And then the only other thing the doctor has to understand is, you know, we've got a fee that we're willing to pay for an insurance exam, and hopefully that aligns with the fee that they're asking for
Right.
to, you know, to complete that same exam. So again, very open to it if the situation necessitates it. I would say let's explore the other opportunities to see if there's a way that maybe we could underwrite them without an exam if such were the case. And I'm going to see, Dennis, anything you'd want to add to that?
Yeah, that's the druther right there, Bobby. The problem with having an attending physician's office do an insurance exam is more often than not, they screw it up. Okay. The reason is they're not used to handling that blood kit. And the blood kit is very important from a chain of custody standpoint. You know, the urine bottles are sealed, you know, because of drug testing and other things. They don't fill out the tickets properly, and the labs just will not process the kit. So your client ends up getting stabbed twice because they didn't do it right the first time at the physician's office. So I discourage attending physicians from doing it. But Neal said a good thing here. The Pyramid services now are affiliated with some of the local LabCorp outfits. So you can actually schedule an insurance exam and have somebody walk into the LabCorp office, get the insurance exam done there and have the labs done at the same time. But additionally, Neal said that, you know, he encourages the accelerated underwriting process. So if an attending physician has done all the labs that are necessary 3 months ago, is there any real reason to do an insurance exam? Okay, that's the question. And that's what Neal in principle is very good at.
Okay, great. Thank you for answering that.
You're welcome.
Mark, did you want to say something? Because
Yeah, I was just going to add that part that they both kind of hit on it at the end there, though. We've got so many other ways, Bobby, to get it done nowadays in terms of medical records and the way we've raised all the different limits. I think that would be the first thing I'd explore. Number two would be, you know, if they're going to like a concierge type doctor, the one that I go, they have their own lab. I mean, so they know how to do that properly. But I've had other doctors in different places I've been where I wouldn't have trusted them to do that. So I think if you get in a situation where that's the most important thing, I'll add to it. You just call me or call Dennis and we'll get an underwriter on and we'll tell you exactly how it's got to be done. And so if it doesn't go well, we at least knew what happened.
All right, that'd be great. I just got off the phone literally before we got on, and we just wrote a case a couple minutes ago, and there's no reason why we can't give it to principal. And he says, oh, I'm going to my doctor first thing Monday morning. And I said, no, don't go to the doctor because you're going to have to get another blood test. They're not capable of doing it the right way. And he goes, well, I'm going to go see the doctor. If I have to do another test, I'll just do another test. He's 70 years old. So, but we can deal with Dennis and Kathy and Mark on that next week.
Well, that's an interesting point you raised there, Bobby, because at 70 years old, you're going to pick up that senior supplement that's required.
Correct.
Okay, so you got to have a paramedic go out there anyway. So
yeah,
that's a very good point.
Yeah, we haven't gotten away from that yet.
Well, let me ask
Still
you a
working on
question. Why I have you all on the phone? Could you do a senior supplement at a LabCorp, or they don't really do that?
I don't know that they're set up to do it for us now.
Okay.
That's a great question. Exam
So-
one, if you went to a Quest exam one center, maybe because Quest Labs owns exam one. LabCorp is a competing lab, but I think that they will do some of those services. So you might have more luck getting that senior supplement done if you went to a Quest or Exam One affiliated walk-in
I agree.
versus, yeah. But I think, to the conversation just real quickly. So from a clinical perspective, LabCorp and Quest are the two largest clinical labs that are out there. And there's a lot of the large hospital systems that have their own labs, think Mayo Clinic and, probably John Hopkins and whatever the case might be. But Exam One is the only one that plays in the insurance space as well. But Exam One and Quest, as their parent, to their credit, have found a way to partner with LabCorp specifically to make that clinical lab information from LabCorp, even though it's a competitor of Quest, available in the lab picture service that Exam One offers to their clients. And I think that's a great example of how the industry is working to go out and try to tap other sources of information and collaborating with, in some situations, competition in order to provide a key service to us. And so, that's great that exists out there. And I think we're hopefully going to see more of that as we go forward.
Thank you.
We have a few more questions. Before we bounce over to those questions, Neal, I want to ask you about field underwriting. And while we, with all of these accelerated processes and drop tickets and let's do things fast and quick and, get these things issued, yesterday, can you comment on why field underwriting is more important than ever in this digital world that we're living in? And what is the one or two things that you would recommend all advisors ask during the field underwriting process?
Wow, Kathy, that might be the hardest question I've had today. But it's a great one. And so here's what I would say, relative to that. And let's think within that context of, what would be some best practices that are out there. With the availability of these accelerated underwriting platforms and even our business solutions enhanced underwriting program, where we're again trying to underwrite without having to have somebody examined. I think historically, advisors have always worked hard to get that client prepared for that insurance exam. And in a lot of situations, let's get that exam scheduled and taken care of, right? And so I think one of the best practices today is to maybe rethink that posture or that position, and instead, create, what I would say is maybe 3 or 4 questions and ask, your client. And I understand that through things like, tele interviews and online digital applications that the client completes on their own, the advisor's not sitting there today completing the application and having the full breadth of knowledge relative to that applicant's health at the point in time that they're, again, sitting down, initiating that application process. And I'm an advocate for the tele-interview, and I'm an advocate for the online application. But I do think that without creating a redundant process, there are, again, a few questions that an advisor can ask the client to be prepared. So again, if we're thinking within this context of let's not lean into the exam right away, the obvious one is, do you have any major medical impairments that I need to know about? Think coronary disease, cancer, diabetes, stroke, those kinds of things. Importantly, have you been to the doctor in the last 12 to 24 months? Have you had a complete physical? Did it include, cardiac studies, labs, whatever the case might be? Because I think if you start to ask those kinds of questions, now you can start to navigate through that, again, non-examined opportunity that might be out there for the client, whether it's the AU program or it's the business solutions underwriting program. So I think those are really important without having to go through and go through the full battery of health questions, if you will. You can ask just a few questions there. And I think that will benefit the client, obviously. I think it benefits the advisor, and ultimately, I think it benefits both the agency and the carrier. At the end of the day, what we're really trying to do, and I've said this in a few different venues, and so for some of you, if you heard me talk before, you maybe have heard me. The blood profile has been phenomenal for the insurance industry. And we really only started doing blood profiles because of the introduction of HIV and AIDS. But I think the industry's gotten addicted to blood. And I think we've got to figure out a way to wean ourselves off of this addiction to the blood profile. Now we can still get the blood, but we can get it by different means. And so, I think, again, let's figure out a way to still get the information that's valuable to us, but let's keep the client in their experience top of mind. Let's be honest, underwriting, for the first 20 or so years of my career was not very client friendly. It was, we need this, this, and this, and thou shalt get it. And if you don't, thou shalt not get insurance. And take it or leave it. And I think we've tried to create a mindset now that says, you know what? Let's create a better experience for individuals. Let's use the information that's out there. It's more readily available. We can get to it faster. We've had an experience relative to electronic health records as an example, and that would be one of my other best practices. I know you want to do it, and Dennis might even want to do it, but don't go get all those medical records. Let's just slow down a little bit and see if we want them or not. And if we do, let's figure out how we want to go get it. So we can get electronic health records on average, based on the work we've done to date, in about 5 days, compared to 20 to 25 days for a traditional APS. So again, and I know that the sequence of things sometimes doesn't really impact us relative to that 20 to 25 days, because if you as the advisor or Dennis is file building before I actually see a case at the principal, I don't know that you waited 25 days for those records, but the client waited 25 days for somebody to get those records. So let's work together and figure out if we can get the information we need, get different information than what we've traditionally gotten, but more importantly, can we get it in a different way than we've traditionally received it?
Yeah,
And Dennis, I'm sure you guys have experimented with some of the human API, EHR, direct patient portal information, but I think let's take a step back and kind of redefine maybe what the best practice looks like. So let me stop with that. I think Dennis wanted to jump in.
Yeah, this has been a paradigm shift, and Bobby Trottenberg's on the phone here. Trying to get the experienced agents and even the experienced agencies to step back and say, let's not order the medical records, or let's not order the exam. I mean, that is a huge paradigm shift for these professional agents. Okay.
Yep.
And I mean, when they send in an informal inquiry and an authorization signature, they want us to order medical records. Okay. And that's a tough nut, but Mo's sitting there on the other end of my screen, and we're working on a big case of his right now. And the first thing I told him to do was to get the HAPI reports, the human API medical records. It may take us 3 or 4 weeks to get the actual medical file, and we've gone ahead and ordered that one. But the HAPI records are going to come into us in hours. Okay, and we can put them in front of the underwriters at principal or whatever, and let them decide whether they want the actual records, or if they even want or need an insurance exam on the client. It's a shift. It's a big shift and a good shift.
Yeah, and let me be clear. I'm probably trying to move your cheese some, but I'm not trying to keep you from the cheese, and that both applies to both the advisor and again, someone like Dennis, who is a extremely valuable talent to both yourselves and to us. But I do think that, again, this paradigm shift, mind change, whatever the case might be, I think will really benefit all of us. We're just trying to again, create an experience for the client, which we think is better. And honestly, again, I think we'll create a better experience for all of us in the end. And And we might eventually have to get the medical records. The one thing I'm mindful of is I don't want to go after digital data, if you will. Wait 5, 8, 10 days, only to come back and say, well, now we need to go get the traditional APS, because what you're going to say to me fairly is, well, gosh, Neal, if we'd ordered that APS originally, instead of waiting 10 days for you to tell us, we wouldn't have lost those 10 days. And I get it, and I understand that. But I do think that if we can just think about this a little bit differently, again, maybe ask a few of those key questions and figure out where we want to go. I mean, our goal is to be able to treat the electronic health record as an equivalent to an APS. And I've had underwriters that have said, well, how can I be sure that I'm getting all the information in the electronic health record that I get in an APS? And my only retort to that is, how do you know you had all the information in the APS? You assume you did, but I've been doing this long enough, and Dennis has been around long enough. We might have gotten the full record, but we don't necessarily know. So the real question at the end of the day is, do you have the information you need to underwrite the risk? And forget
on the
about
other
whether
side
it's
of that, on the other side of that coin, Neal, what I tell the producers is, you know, when you send us in an informal inquiry and it says, who is your attending physician? And you say it's Dr. Jones. Well, when we order the APS, and along the lines of what you said, how does the underwriter know they have the medical records? How do they know they have complete medical records? Well, they don't, because in today's day and age with HIPAA protections, these doctors' offices are not sending consult letters or other physician records that may be part of their underwriting file. But the electronic health records will give us a stream of information from multiple physician sources on things that have come in through that health network. So you as the agent don't have to know that the attending physician is Dr. Jones and he saw Dr. Smith for dermatology and he saw Dr. Weiss for cardiology, you know, because we order Dr. Jones APS. And like you said, Neal, it may take us 3 or 4 weeks to get that back. And now we find out that we've got Dr. Weiss and a dermatologist and everybody else. Whereas the electronic health record, if we'd have done it initially, we'd have that information in 3 days.
Yeah.
Okay.
Yeah, it's a good point, Dennis. And that's the thing I've told individuals is the beauty of electronic health records is I don't have to know who the doctors are that you saw. I just have to know
Correct.
who you are. Now it helps if who I get information from matches up to what is disclosed on the application. Gonna be honest, makes me feel better. But importantly, to Dennis's point, yeah, if we know who you are, one of the beauties of the electronic health record is we can just go out and say, find me records on Neal Halder. And if this thing is working perfectly, you know, I should get any records that are out there, whether it was, you know, my primary or a specialist, you know, emergency room visit, whatever the case might be.
Thank you. We're going to pivot to a different topic within underwriting, and let's move over to financial underwriting. John, I know you've been waiting very patiently. I'm looking at a very professional picture of you, and I'm kind of thinking that you are at your home in Cape May, and you're probably in shorts and a t-shirt. But now he's got a long sleeve shirt on. Hi, John. How are you? You're on.
Yeah,
you're on mute, John. Still on mute, John.
Okay, sorry.
Hi, John. How are you?
Good. How you doing?
Fine, thank
thank you, Neal.
you. John is a longtime good friend of Agency One and a very good advisor. John, take it away.
Thank you. Well, I put in my question talking about financial underwriting. When I started a case with some clients, they told me they couldn't get any more life insurance or key man life insurance. And after a conversation with Dennis, we were able to write a substantial amount of life insurance, and it's all with principal. But we've got a couple of
awesome.
we still have a few more needs, which are a little bit different in that there's a couple of defined benefit pension plans that are frozen and they're underfunded, probably to the tune of over $3 million. And, you know, they talked about and they brought up the fact that, you know, maybe we should put some life insurance on a couple of guys so that because it's expensive to keep funding this. So from a financial how do you look at that? How do you go about funding something like that?
So make sure I'm clear, John. So in this situation, the employer is looking to maybe
Correct,
insure a couple of lives because of the fact that the DB plan is underfunded.
correct.
All right.
Yeah, with these DB plans, it's almost like the last man standing is gonna lose out, so.
Yeah. So, well, I probably should let Mark talk about our solutions relative to that, but, and then he can, earn his wage for the day. But so what I would say to you, John, is, from our perspective, again, when we're financially underwriting a case, we're trying to look at, what the need is. And, we've done a lot of what we would call aggregate funded underwriting. And I'll speak specifically to our COLI side for a minute here. So on our corporate owned life insurance, non-qualified solution, where, again, they've got a liability that they're funding. We don't always write a policy on every single individual who's participating in the plan. To make that plan as efficient as possible cost-wise, they'll take an aggregate funded approach where they know what their deferrals are coming in, and then they'll figure out how much death benefit they need, and then they'll figure out how many lives do they need to insure in order to get the death benefit they need, stay within MEC limits and those other types of things. And so we've taken that approach to underwriting risks, and from a financial underwriting perspective, here's the challenge I would present to you is, so I still have limits relative to the capacity that are out there. So if we start talking about, 50, 60, $80 million of life insurance on a single life, I still have that capacity issue that I have to deal with. But relative to, well, they're overinsured because their income doesn't support this much life insurance, we have ways that we can work through that. So, if I'm making numbers up, let's say they make $500,000 a year, and we normally would have a 10 times income multiplier for them. From a personal insurance perspective, well, that's from a personal insurance perspective. If they're being insured to help, fund an underfunded defined benefit liability, we might be able to get comfortable insuring them for that additional coverage that might be desired on their life. And so what I would say is, when you have those kinds of situations, that's where you can bring in someone like Mark, and I think he can help as a consultant, again, working with Dennis and Kathy and the team at Agency One. And then we can work collectively as a group to figure out the best approach to take. Mark, I saw you came on camera, which means you want to say something.
You're good at this, Neal. You're good. Hey, John, how are you?
Good, how you doing?
Good. So I think I would start with what we call our informal business valuation. So let's start with doing, in my opinion, I would do an informal business valuation on this business you're talking about. Second, I would let us review this pension plan. And then, it's kind of what we call sometimes it's a repurchase liability. So once you look at that pension plan, it's pretty clear who's probably the most at risk, or who they owe the most money to, and who's the oldest. And so there's some things they could look at. And then you might have to move down that list. So say there's one person that's the highest liability, but he's already, getting ready to retire and he's in bad health. Well, we're not getting insurance on him, right? But we could look at it and look for ways to have some coverage. So I would start with the informal business valuation, and then I would try to see if they have a buy-sell agreement. Let's review that, and then look at the details around this pension plan. What kind is it, who administers it, and all of that. And then I think one of the things that Neal did not mention, but he would, if we had this discussion, would be from a financial underwriting standpoint, our underwriters work very closely with our advanced solutions folks. And if we have a business valuation and they say that business is worth $50 million, I have not, to this point, maybe Neal can speak up, I've never had a case where an underwriter disagreed that if there was two owners, that there wasn't a $25 million issue for both of those. So we should be fine in that case. I hope that helped, John.
Yes, thank you.
I was just gonna say that doesn't even account like future growth or trend lines or anything like that that I've seen, at least historically. Sorry.
Well, we would, just to your point, that's a great point, Mo. We would do what I would call interpolate, and we will give some values to go forward if it's reasonable. And then there is a lot more art than science around that. So that's open for discussion.
Great.
Good
Thank
question.
you. We have one more question, Neal. I know we're coming to the bottom of the hour, and it was from Kim Nadovitz, who had to drop off the phone, but I know that Kim will come back and listen to the recording. And I think there were two separate questions, but they were asked in the context of one. And it's kind of funny because the first question was, can we discuss the increase in drugs like Lexapro and underwriting? And from that, she then pivoted into, also associates in law firms need life and disability, and we would prefer to use one carrier to provide all of those solutions. Now, I'm not sure if she's referring to the fact that associates in law firm have an increased use of Lexapro. And having
They could.
Having started my career at a law firm, I kind of understand the question if there was a connection there. But we can take them separately and together. And I think from the business solution standpoint, I understand where she's coming from in terms of perhaps looking for a one-stop shop. So maybe take them in any order that you want. And if you see that connection between law firm associates and Lexapro, add that to your conversation as well.
Yeah, so the first thing I would say is we couldn't agree more that using one carrier like Principal for your life and DI makes complete and total sense. So I think we have a very strong DI portfolio to go with our life portfolio. So
Very.
that opportunity to do both is great. Now, we don't have a great process, and we're working to make that better. But certainly, I understand that need, and I think we are well positioned to meet that need. So relative to Lexapro, I made the comment earlier that everybody has sleep apnea. Well, again, I'm going to refer back to my earlier underwriting days. Everybody was taking Valium at one point in time. Maybe Lexapro is the new Valium, if you will, for individuals. And again, on the life side, if someone has what we would consider to be, mild depression and anxiety, well controlled, and we can verify that control, those individuals are qualifying for preferred rates and really not creating a underwriting challenge, if you will, for us, as long as the information's out there and it all comes together. I can't speak to underwriting them for disability insurance if that was the question. I'm sure there's more considerations there. I don't underwrite disability. But, I think in general, we recognize the fact that, I think if we look at our society today relative to where it's been previously, there's probably a greater reliance on some prescription drugs compared to what we've seen. And I kind of joke about the fact that everybody has sleep apnea and everybody seemingly has depression and anxiety. I mean, those are real conditions, much like hypertension and diabetes are, but they're also very controllable conditions. If someone sees their doctor, sets up a treatment plan, and follows that treatment plan. And I think we're trying to be very fair with our approach to underwriting them. And again, allowing them, absent of any other issues, to qualify on the life side in particular for the best rates that we have available. And we'll continue to do that as we go forward. And so, I think we've got very good solutions, again, relative to the life and DI at Principal. And so I would encourage, in that situation to explore where we might be able to help them. And again, I just think from an underwriting perspective, at the end of the day, our goal is to insure as many people as we can, as appropriately as possible. That doesn't mean we can insure everybody. We still unfortunately have some individuals that we're not able to take. But, by and large, and just at Principal in particular, we offer on 96% of those that apply for coverage. So we decline about 4%. We offer it standard or better on basically 95% of that 96%. So if you take the 96% and make that your 100% subset now of the insured lives, 95% of them are going out with a standard or better offer. And probably 63% of them are getting either a preferred or a best class preferred rate. So I think our approach to underwriting is very attractive relative to the outcome that you might expect. And we're working very hard to make sure that we create a great experience as well.
Agreed.
I don't think that we could have a better wrap up to this Tap the Talent than your last comments, Neal. So if I will ask one more time, if anybody has any more questions, feel free to speak now or follow up with
Enjoy the
Dennis
rest of
and
your day.
myself. Follow up with Dennis and myself, and we will make sure to, funnel them over to Mark and to Neal and see if we can get some additional answers. But on behalf of Agency One, I want to thank Neal and Mark for your time, your commitment to Agency One, for your partnership, for your phenomenal offers, and for being just a great partner. Thank you to the participants in this webinar. We appreciate your loyalty to Agency One, and we're very grateful for the opportunities that you give us to help you with your cases and do the right things for your clients. And how about Gonzalo Garcia, who is about to get on a boat for a week vacation, is now pinging me going, how did the Tap the Talent go? How is Neal? So his timing could not have been better. So thank you, everybody. I hope you have a great weekend. And as you know, we host these, we're hosting these about every 3 weeks. So look for some additional invitations. And we hope to see everybody at our annual meeting the end of April in Washington, D.C. Enjoy.
Thanks, guys.
Thank you.
Thanks for
Thanks,
having
Neal.
me.
Thank you.
Thank you.
Thanks
Bye-bye.
very much.